Guys, how we doing? I'm Ryan Mack. Welcome back to the trading, guys. This week we're going to fly through the weekly fundamentals. I'm not going to be, it's not going to be a long one tonight. Maybe, I don't know, 15-20 minutes. It's not going to be one of the videos where I explain in full, you know, what this is, what that is, blah blah blah. We're just going to quickly run through, see what this week holds. So where am I? Let me just check. Wait, where's my bloody pen? Excuse me. Okay, so as you know the script, if you watch my videos every week, you'll know what the deal is. You write trades, you write strong, weak, and neutral. If this is your first time ever watching my video, I know you might be thinking strong, weak, and neutral doesn't make sense. Why wouldn't it be strong, neutral, and weak? The reason for this is when we go through fundamentals, fundamentals is what tells us which economies are actually strong and which ones are actually weak. Believe it or not, it's not drawing triangles on our page with imaginary lines that tells us if an economy is strong, right? It's cold, hard data, i.e. CPI, PPI, trade balance, and so on and so forth, all right? Manufacturing, services, blah, blah, blah. So what we do is, once we've been through all this, and we work out which economies are strong, which economies are weak, and so on, we write down which ones are strong, which ones are weak, and which ones are neutral. At the end of it, we ignore the neutral ones and we match up a strong economy with a weak economy. So let's just say, for example, the British economy is super strong and the Japanese economy is super weak. You now know that you are looking for buys in GJ, right? Because the fundamental economics tells you that, right? That's how banks pick trades as well. I'm not trying to say I trade like the banks. I'm just saying that's how they fucking pick trades. They don't draw a triangle on their page and be like, if this candle breaks this triangle, I'm going to drop £5 billion. It's not how they fucking do it. They use cold, hard economic data. Now, don't think that just because I was slagging off drawing triangles on your page there, that I am hating on technical analysis. That's absolutely not the case. We all use and we all need technical analysis, right? Even I use it. The point is, technical analysis should only be used to give you areas of potential entries and potential exiting the market. It should not be used as a reason to enter the market. You see what I'm saying? So that's why we do it, all right? So let's get moving on. Trades. Then you're going to write down strong, weak, and neutral. Now, as always, remember, you don't just change, you know, if an economy's got good news this week, you don't say, oh, right, that's strong now, and then next week it's bad news, oh, it's back to weak. That's not how it works in the grand scale of things, right, the big picture. You get the macro market cycles, and you get the micro market cycles, right? So I'm not going to cover that again. That's another that's another podcast on its own, right? I'm just going to get straight to fucking fundamentals here, because it's already late. I'm exhausted and I've got a big day tomorrow. This week on trades, we caught a phenomenal trade on, what do you call it? Copper. I missed this entry. This was my freaking entry. I missed this. However, I did catch it right here. I ended up in the end being up over, it was 31,000, well, not pips, it was 31,000 points, which is 3,100 odd pips we ended up being over the week, right? We held it for a week. We entered around here and we just held it the whole time, right? It was pretty phenomenal. And look, this was the entry I'd marked and this was the exit I had marked. You can see both of them have hit, right? If you've watched my previous videos, when, you know, before this even happened, you'll see that both of them have hit, all right? I may enter again if it comes down to here. See this? Wait there. Small wick candle, large engulfing. I will now be looking for the copper to come back down, retest this zone, and fly again, and I'll be entering buys. Obviously, if it doesn't, I will not be entering sales, because you're entering sales bang into an area of support. And massive, you know, it's just so messy here. It's not clean range like this, right? It's very messy. So if it breaks below it, I won't be entering sales, I'll just be waiting for buys. And so on and so forth, okay? So if it comes back down here, I will be looking to enter again round about 9336. If some of you are looking at copper and you're like, why is his number 9336 but mine's is like 4234? Man, his number's totally different from mine. You will find that it's because I am on copper versus USD, and you, if you look, will be on CFDs, contract for difference, okay? Which is very different to just trading copper and USD. Sometimes on copper like this, it can be flying, but on your CFD, it can be melting, right? So they are very different. So if you're looking at this and you're like, why is this price 9,300, but mine's is 4,200? You will be looking on the CFDs and not actually looking on copper USD. Some brokers don't even let you trade copper, okay? So if you don't have it, don't stress. But we just caught this. Everyone in my group, let's have a look if you want. Can I show it? Wait there we go, I can. Bosh, let's have a look at the lads that caught it quickly, and then we will cover this week's analysis. Trade results. Here we go. Boom. What's this one on? Is this copper? Let me just check. I believe, yes it is copper, there it is, yeah. Copper vs USD, $512, my man Andreas. We've got my mate Jeff, 46 on gold. These are scalps, so these gold ones here are scalp trades, right? 46 on the scalp, 67 on the scalp, 530 on copper swing trade, right? Because I'm a swing trader. My business partner Lee is a scalp trader, right? So he gives scalps daily. Sometimes I give, I might enter 5 trades in 1 month. Sometimes I don't enter a single trade for 2 fucking months, guys, because I'm a swing trader, right? But on the flip side of that, when I do enter a trade, I also hold them for, 4 weeks, 8 weeks, 15 weeks, 20 weeks. I just let them run and run and run. I only close really when fundamentals tell me, okay, it's about to reverse. I don't close it just because a couple of candles have given a pullback. It's not why I close it. Here we have a look. A losing trade, $18. Copper up 526. Copper again, his other trade, 185. GJ scalp 101, 165. All right. These are all the lads in the group that copy our trades. Trade results of this week. Fantastic. All right, there we go. Even Martin. Martin is a relatively small account, but he still smashes it. That, in terms of percentage-wise, that is a phenomenal percentage that he's got there. All right, lads. What a great week. So let's get cracking with fundamentals. Now, for fundamentals, if you're new to my channel, predominantly during the week, I use this here to follow fundamentals, okay? Like to see what's happening daily, blah, blah, blah. This is called Trading Economics. So it's tradingeconomics.com. It's 100 million times better than Forex Factory because you get a lot more information. Maybe if you go in Forex Factory, there'll be like 1, 2, 3, 4, 5 pieces of information here. But as you can see here, there's about 15. You know what I mean? So you get a far more information on Trading Economics than you do Forex Factory. But the reason why I use Forex Factory for doing my weekly reviews every Sunday is because it's far easier to select your countries. Look, if I was to look countries, look at that. If I have to start taking these off and clicking them back on, it's a massive pain in the dick, right? So that's why I don't use it. I just use Forex Factory because it is far easier because you just simply come up here and there you go. Look how easy that is, So let's get moving. What I do is I do each pair individually, except from Aussie, China, and New Zealand. I do all them together, and it's because they are very closely correlated. I'm sorry, a fucking mosquito's bit me in the ankle, and it's itchy as hell. That way, once you scratch it once, it drives you bloody crazy. So, let's have a look. Wait, I turn the brightness down, it's killing my eyes. Okay, that's better. What day are we on? 16th. That's the 16th to 20. Okay, so that was last week. No, I'm talking shit. That's this week. Let's go back. So we always look at the previous week, and then we want to look at next week to see what we've got lining up, all right? So China CPI year on year, bullish. PPI year on year, same, it hasn't changed, so it's neither bullish nor bearish. I mean, it's negative, so it's not good, but it's neither bullish or bearish, right? Westpac, there's nothing really there. Inflation expectations has increased, it's bearish. Inflation expectations got a quarter, bullish, but I mean it's not enough to make the NZD move. Leading index. 6 month. Oh, that's a month on month. It's shit. Bearish. Bullish. So when it comes to manufacturing and services, right? Anything above 50 is bullish. Anything below 50 is bearish. So, for example, where it says 46.2 there, right? Yes, it's increased, so you can see that that's clearly bullish. However, if that went from 46.2 to 49.1, yes, it's increased, but it is not bullish, okay? It's very important to remember this. It still means it's bearish. Unless it breaks 50 and upwards, it remains bearish, okay? So that's good. That's now into bullish. But like I said, the NZD economy is totally fucked. One bit of good news, yes, it's very good to see, so we will continue to monitor it, but by no means is it a strong economy, right? What you might find is that it might look on the charts, on the kind of the 1 hour, the 4 hour, it might, 15-minute, whatever. It may start to look as if it's going strong, right? And you guys, if you're just technical analysis guys, you'll be like, oh, look, NZD's powering through, it's coming back, but it's actually not. It's just showing intraday strength, pullbacks, blah, blah, blah. It's nothing yet to write home about, When I say something is strong, it means you could enter it now and hold it for the next 3 months, that would be a strong economy. However, with NZD, if you entered it now, you might be able to hold it until Wednesday, and then you're going to have to sell it again because it's that fucked, That's how it kind of goes, guys. FPI month on month, that's a great increase again, so more bullish news, that's great. Money supply year on year is down, it's bearish. New loans is massively down, so that's bearish. So when things get bearish for China, it has a knock-on effect to the Aussie dollar as well, okay? Because when China's doing well, the Aussie dollar does well. When China does shit, the Aussie dollar does shit. I'm not going to explain in this video why that is. If you want to, I've got 100 million videos, if you just skip back, where I explain all of this, every single video. I'm not going to bother this time, I can't be arsed. But there is a reason for that. Next week we have got big news, so let's just have a look what I've got here. For NZD, I'm keeping NZD at week, okay? Now, if you're an intraday trader, you might see some strength in the NZD, and if you want to trade that, you want to enter a trade, hold it for 30 minutes, hold it for an hour, that's absolutely fine, guys. You can do that, okay? I'm not saying, don't. I'm just saying in terms of overall bigger picture strength, it's not a strong economy. It's really shit. What else? AUD, yeah, I've got AUD in neutral, and it's going to remain in neutral because it's pretty poor. And China isn't doing well, so it's going to have a knock-on effect as well. So next week, we have got loads of news that we want to see for these three economies. Unemployment change, cash rate, RBA statement, cash rate. So they may be cutting rates, and that would make sense because a lot of the Aussie data is coming through pretty weak, and when it starts to come through weak and things keep dropping, that is when you cut rates. You don't want to be cutting rates when things are still going strong, because inflation can then run away with you, right? Now, I know you're probably going to say, well, what the fuck are you talking about, Ryan? You're full of shit, because a couple of months ago, America's numbers were all coming in strong, and the Fed still continued to cut rates. That is true, and this is where trading gets a little bit wishy-washy. But you'll see now, they prematurely cut rates. I'm not trying to say they don't know what they're doing. Of course they know what they're doing. They're very intelligent people. But they just prematurely cut rates, and they were trying to get it all through before Trump came in and blah, blah, blah. And there's loads to cover on that, right? So this is what makes trading that little bit difficult, and it's not very black and white, which we would all want it to be, right? So you just have to bear that in mind. But, the classroom answer is, you don't ever want to be cutting rates when numbers and stuff are coming in strong, because inflation can then run away with you, and when it runs away, you could end up like fucking Venezuela, where you're going to buy a loaf of bread and a pint of milk with 2 wheelbarrows full of fucking money, because your money's just like sugar paper, that's what happens. So that's the reason why you wouldn't do that, alright? Yeah, we've got tons of information we want to see next week to see what effects it's going to have. So yeah, I've got NZD weak, Aussie I've got in neutral, alright? Obviously China we don't mark down because we don't actually trade the Chinese currency. We just keep it there because it gives us an insight as to if Aussie is going to potentially do well, okay? CAD strength, manufacturing sales, shite, wholesales, month on month, shite. I mean, it's not mega, it's not, life-changing news, but I'm gonna keep Canadian dollar at. It's been showing good numbers. Let me go back 2 weeks, but overall, when it shows the good numbers, it's just that kind of you get the macro market cycle, and then you get the micro market cycle. Right, I've already showed you in a previous video. Yeah, poor, fucking poor, bullish, but it's just one, So yeah, I am. Let's just see. Yeah, it's weak. That's building permits, but it's only month on month. These are all month on month, so they're pretty shit. What we got next week? We've got CPI. Okay, so that's going to be a big week, and they're anticipating it. They're forecasting it to come in good. Which is strange. I'm going to place CAD in neutral, right? Just going to place that in neutral. You could keep it in weak if you wish, It's one of those things, of course, remember, this is just my opinion. You could keep it in weak, right? You could. But I'm just going to place it in fact, I'm going to second guess myself here, weak or neutral, because the economy is fucked, right? We can see that. And also, one of the important things to remember, right, is that Canada is very heavily backed by petrol. Right, so when oil is doing really shit, which it is, the Canadian dollar does shit, right? It has a massive impact. They're very closely pegged. Am I going to keep it in weak or move it to neutral? Decisions. I'll keep it in weak for now. You know what? I'm going to keep it weak because it hasn't really. If you want to keep it in neutral, it's fine. I'm just going to keep it weak. Hasn't really given us enough details to see. That it deserves to move. Moving on, CHF. We've got nothing on there. CPI, shit. PPI, shit. It's not that good. But, I mean, we always expect that from CHF, right? So, CHF has always traded kind of differently with me. I always pretty much place it in neutral, right? However, you need to just have it in your mind that although CHF, I put it into neutral, if it's up against a really shit economy like the Japanese yen, the euro, New Zealand, it will be strong in that pair, right? It would be strong in that pair. But obviously, if you put it up against other currencies, potentially like USD, it may not be strong in that particular pair at this time, all right? So I always put it in neutral. Another reason why I predominantly put it in neutral, you don't get a lot of big data from the Swiss franc, right? As you can see, week in, week out. And Swiss franc really gives us moves when the market sentiment changes from risk on to risk off. Markets are 98% of the time risk on, right? And they turn to risk off when there is uncertainty in the markets, right? So uncertainty could come in the form of random wars, like when Russia and Ukraine first kicked off. People will be taking their money out of the USD, putting it into risk off assets. So that includes gold. That's why gold flies when there's a war. CHF, that's why CHF flies when there's a war or something random that happens. Japanese yen, that's why Japanese yen gets this weird strength. You're like, why is Japanese yen strong when the economy's fucked? Because in that scenario, it's got nothing to do with their economy being strong. It's just a kind of little intraday move where people are moving their money out of riskier assets, i.e. the USD, because when a war kicks off, people are like, fuck, is America going to get involved? You know what's going to happen here? So they'll take their money out of the USD, they'll put it in safe haven assets. I was going to say currencies, but it's assets. Silver, gold, Japanese yen, Swiss franc, and so on, okay? That's why you get these moves. So, moving on. CHF is neutral, okay? Well, for me. Let's have a look. The euro is fucked right now. So if you're looking at a pair on the euro, right, from last week, and you're like, oh, Thursday and Friday, euro started flying against other currencies. It's really pulling back. No, you have to remember, guys, it's not pulling back. It's not making a comeback. It's not getting strong. What you're seeing when euro gives you this strength on the charts, that's just simply big institutions taking their profits, and candles will start to fly because when institutions enter trades, they can't enter a trade like you and I because their accounts are fucking massive. They would end up blowing, countries' fucking economies. So they have to scale in. That's why when you see markets going up, then Tuesday, Wednesday, you've got a couple of pullbacks. Thursday, Friday, it'll start going again. That's because they pull it back to then scale in and add to their positions consistently, right? Continuously as well. That's why they do it. So when you're in like a Euro USD pair, and you're seeing Euro USD, flying, it's not that the USD is weak and Euro is strong. All that is, it's a retracement. It's not strength in the Euro. It's simply a retracement. It's simply institutional clients taking their profits, which means the market then flies in that opposite direction. They will then lump in when it gets to an area of value, and they will ride that price back down again in line with the USD, right? In this example, of course, all right? So don't just think because you've seen a couple of fucking gay little candles on the 50-minute time frame flying, oh, fucking hell, Euro's flying, it's making a comeback. No, it's not. It's fucking wank. The Euro is shit. So let's have a look. Syntax investor confidence, -12. So it's better than before, but it's still -12, right? So that's dog shit. Bearish, 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 bullish, bearish, bullish, right? So it's wank. Euro is still weak for me. It's not going to change. It's going to take a long time for that to change, in my opinion, because they are in the hot locker. This week coming up, we've got trade balance. We want to see... so when it comes to Euro, yes, we've got Italy and Spain and stuff in here, right? We only really care about Germany and France, because they're the only ones that really have the big enough economy to make the market move, right? If it's like Spanish CPI year on year, yes, we'll take a look at that, right? But if it's just like, oh yeah, something fucking month on month, quarter on quarter, we don't really give a shit because it doesn't really affect the Eurozone, right? The two countries that affect the Eurozone is France and Germany because they're so big, okay? So you can cut out a lot of this bullshit. What we got, French final CPI, it's a month on month, yeah. So we don't really care about months on months, we just like to see them to see if they're coming in good or not, because then we can kind of predict or anticipate what next month's going to be like. Is it going to look good, is it going to look bad, so we can kind of prepare for the future, right? Speculate, I guess you could say. What else? German PPI, but it's month on month. What we really care about is, we love this, manufacturing PMI, services PMI, we love PPI, CPIs, etc. But as long as they're kind of yearly, right? And look, they're all shit. Look, anything below 50 is bearish. They've only got two above 50 here, right? Totally dog shit. Totally dog shit. Okay? So yeah, the Euro is still weak for me. Moving on. Let's have a look at last week. Pound. The pound is in a bit of a hot locker right now. Now see this here when it's green. Don't be fooled into thinking that, oh, that must mean, because it's green, that must mean bullish, that must mean strong. No. The reason it's bearish. If you look previously, it was 3.1%, right? Now it's 2.5%. It's went down. That's bearish, right? So why the fuck is it green then? Well, it's green because it was forecast to come in even lower at 1.1, and it's came in better than forecasted, right, at 2.5. So they've made it green. But actually, if you look at the previous, it's still melted, it's still fucking doing terrible. So that's a negative, i.e. bearish, okay? Minus 0.1, bearish, bullish, bearish. Look, it came in better than expected, so it's green, but it's bearish. O2, bullish, bearish. Excuse me. So we're getting really mixed data, right? That right there is what you call mixed data. It's not good, it's not bad, it's a little bit of both, right? So we're getting you get inflation deflation, and then right in the middle of those two, you get periods of stagflation, right? Where it's like, to me, it's like the Chuckle Brothers, you know, to me, to you, to me, to you, and it's just fucking back and forth, back and forth. Nothing's really going in a positive direction. Nothing's really going in a solid negative direction, so it's pretty shit, okay? I will be keeping pound in neutral. Next week, we've got news that we want to see. Claimant count, we want to see that. Average earnings, yes. Unemployment, yes. CPI, year on year, yes. Same again. PPI, yep. RPI, HPI, yep. We want to see all these. Retail sales, manufacturing, flash services, yep. We've got loads of news next week that we want to see for the pound. Okay, so let's see if it brings us any good news or bad news. Japanese yen, we're almost finished, guys. We've only got Japanese yen and then USD, alright, and then we'll call it a night. Stagnant, bearish, and it's getting worse. Stagnant, massively bearish, and bullish. Okay, so the Japanese economy is still fucked. It's trying to show these signs of strength, but overall it's still fucked, guys. Next week, we've got a lot of news that we want to see. Yeah, core machinery, trade balance, manufacturing, core CPI. Yeah, we want to see that. Trade balance, excuse me. Trade balance is simply what a country exports and imports, right? So if it's a minus, that's called a deficit. That means they are importing more than they are exporting, i.e. they are spending more money buying a load of shit than they are making money selling a load of shit, right? If you want to look at it in really bare minimum ways. And then if it's the trade balance is in a positive, green and not on a minus sign next to it, then it means that they are exporting, i.e. making more money, than they are importing, i.e. spending more money. You know, they're making more than what they're spending, and that is called a trade surplus, which is then bullish for an economy, right? A deficit is bearish, a surplus is bullish, i.e. strong. Yes, we've got a lot of news. So again, for me, Japanese yen is remaining in neutral to shit. And I think we're just in one of those scenarios, again, right now, guys, where the fucking USD is the only strong currency right now. The only strong economy right now. You know, with a lot of bullish thingy. You will notice, though, markets are still pretty stagnant right now. Like I said, so see my copper trade that I entered last week and I gave to the guys in the group, right, so they could copy me. That was... that's my first trade of the year. You know, we're in the fucking second week in February, going into the third week in February. Obviously, I entered it last week, so my first trade of the year is in the second month of the year. You know, the last time I actually placed a trade before that was at the end of November. That was the last trades I placed, end of November, and after November, the next trade I've placed was last week in February. You know. It's not always like that, my method. I mean, it's obviously because it's just good for this shit period of time, right? So right now, there's a lot of uncertainty in the markets. Yes, Trump being in is... it's absolutely amazing for the fucking markets, right? We love it. However, there's still a lot of uncertainty. People are like, fuck, what kind of effects are his tariffs going to have? Because if he puts tariffs on people, they're going to retaliate with tariffs, which will then have his tariffs will have an effect. Their tariffs will have a knock-on effect, and it's just this big fucking snowball effect, right? And if he makes America tax, you know, maybe not tax-free, but if he brings income tax down to like 10%, that's amazing if you're American, right? But there's a massive deficit there. He needs to fill, it's like $2 trillion. Like, where the fuck do you get $2 trillion from? Well, he has to fill that gap by making taxes on import-export even higher, which is going to affect global trade. So all these little decisions that he makes has a massive effect on global markets, guys, which if you're trading the Forex market has a massive fucking effect on you, right? So this is why you really need to know this stuff. If you're a scalper, you're in and out, you don't need to know this. You can just fucking bin it off. You just need to really learn price action, right? I can't be arsed with scalping. I think it's gay. And I just want to be in a trade and I want to walk away, and I want to come back 3 weeks later and check if it's hit my stop loss or if I'm in profit. You know, I don't want to be sitting in front of my computer all fucking day long, getting 10 pips here, 20 pips there. My business partner loves it. He is phenomenal at it. You know, a lot of the guys in our group, they love it. It's different strokes for different folks. My business partner also hates swing trades. He's the complete opposite from me, because he hates being in a trade and then going to your fucking bed at night. He hates it, you know, whereas I can place a trade right now and go to my bed and sleep like a baby, you know. Everyone's got different personalities. We've got different psychological aspects of trading, different psychological triggers, different emotional reactions, you know. I fucking can't handle scalping. I hate scalping. It's pure anxiety for me. You know what I mean? I hate it. But he loves it, and he's very, very good at it, right? So I'm not saying my way is the be all and end all, right? You trade however the fuck you like. I don't care. If you're doing something and it works for you, well fucking done. I'm just saying, if you are looking to get into long-term trading, where you're not panicking just because a couple of candles start coming back down against you, and you're like, yeah, it's fine, it's just a pullback, then you need to learn fundamentals, right? Because it will make you so confident when you're trading. Let's have a look, lads. President Trump speaks and crashes the market. NFI Small Business Index, bearish, bullish, bullish, bullish. We don't care about that. It's just oil. Bearish. So this is important to note as well. Although that's down, you'd be like, oh, that's bearish. No, it's actually still bullish. Why? Because it was already anticipated that it would naturally come down to 0.3%, and it exactly came in at 0.3%. So yes, although it's lower, it's in line with expectations, so it won't have a bearish effect on the market. What would have a bearish effect on the market is if it was anticipated, forecasted to come in at 0.3, and it came in at like 0.1. That would be like, oh, that would be bearish. That would have a massive negative effect on the market because nobody anticipated it. You know, no one had priced that in, okay? But this is exactly what the market anticipated, right? PPI is actually even better. It was forecast at 0.3, came in 0.4. Yes, it's lower than before. However, it came in better than anticipated for this time of year as well, which is positive, right? It's bullish, so bullish, bullish. Unemployment claims bullish. Let's see, core retail sales bearish, but it's month on month. Remember, right? These are month on month. Bearish, bearish, bullish, bullish. Bullish. It's less than before, however, much higher than anticipated. Business inventories bearish. Okay, so this is very much mixed data. However, the US economy is still the #1 economy, right? It's extremely bullish right now. Although we have the uncertainty, it's why you're not seeing, like, why is it not pulling up? It's because things are still uncertain. Okay, it's very important to look at the big picture and kind of understand all these pieces together. Okay. What have we got next week? FOMC, unemployment claims, yeah, we want to see that. Flash manufacturing PMI, yeah, we want to see that. Flash services, yep. Yeah, so we've got news that we want to see next week, okay? So, USD is still a powerhouse, okay? So, in strong, just to summarise here, I've only got USD, which is a strong economy, okay? Weak, NZD, CAD, and Euro. Neutral, I've got odd, CHF, GBP, and Japanese yen. Okay, I'll read it one more time. Strong, USD. Weak, NZD, CAD, and Euro. Neutral, Aussie dollar, Swiss franc, GBP, and Japanese yen. Alright. So, hopefully, let's have a good week. I am waiting, like I said, look, beautiful. Exactly what I had thing with it for the entry, exactly what I think with it to get out. Fucking beautiful trade. 3,000 pips. That could have been about 7,000 pips if I'd caught this fucking entry. I missed it because it happened during the night and it was already coming up here, right? So I had to wait for the pullback to then enter and then ride it up. Okay, that's what I waited for. Oil. I'm not going to go through all the pairs. Yeah, oil's coming down. Let's have a look at weekly. Yeah, there we go. Look. So I would not be buying oil in a million years, right? Never in a million fucking years would I be buying oil. But on the flip side of that, you can't sell it from here because you're selling straight into an area of support, it's fucking suicide. If you're willing to risk $200 on this trade, you may as well just fucking send me your $200 in PayPal, right? Because you're going to lose it anyway. Just wait for the market to come up and fucking hit one of these areas of value, pull back up. If you want to take the counter trend trade and buy it, you can, right? You just have to remember, when you take a counter trend trade, what you're doing is you are selecting a trade which has the lowest probability of making you money with the highest probability of risk, right? When you take a trend trade, a trade which is in line with the trend and all the fundamentals and blah, 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 you are selecting a trade which has the highest probability to make you a fuck ton of money with the lowest possible risk. That's the whole fucking game of trading, guys. That's what you should be taking. Can you make money on counter trend trades? Yes, you can, but you just have to be aware you are taking a much higher risk trade. There's nothing wrong with taking counter trends at all, especially in the higher time frames. It's just something that personally I don't do, right? If this about turned here and started rising, you could trade that, right? Because there's value to buy from here, there's value to sell from up here. I personally don't. I just sit here and I'll watch the market going up and up and up and up. Once I get it hitting an area of value to sell from, I will then enter the sell. You know, that's just how I do it. Like I said, I'm not saying my way is the be all and end all. You do whatever the fuck you like. You know, it's you're paying your own bills at the end of the day. If counter trend trading works for you guys, by all means, fill your boots and crack on. All right, I wish you all the best. Let's have a quick look at the dollar index. I'm not going to go through every pair. Can't be fucked. I'll just do it tomorrow. Yeah, dollar index is probably going to come here, boom, down to here, then you get strength out of nowhere, and then it'll just go fuck off, and it'll just start taking off again. Worst case, it'll probably, you know, come down to here, like this. Bang, bang, or bang, bang. Or even worse again, down here, but I highly doubt it. It could happen, right, because anything can happen in the markets, but I highly doubt it. I think it'll be this position here, fuck off, or down here, fuck off. I'm not going to cover them all, lads, right? There's too many pairs. We are on 36 minutes. Have a great week trading. Don't over trade. Don't over risk. If you wish to join our Discord, you are more than welcome. After the 1st of March, we are increasing our prices from £97 a month to £147 a month. Why? Because last year, I joined 7 different groups just to see, look, excuse me, are other groups out there doing stuff that we aren't, where we can improve, and oh, I never thought about this, I should start giving this to my guys as well, you know, and ways that we can improve our group. Actually, you know, every country in the world, every company in the world does market research, and I can tell you one thing, guys, you can jump into any group that you wish, and you will not find one that provides every single thing that we provide, and I am not bullshitting you. We literally provide signals daily. If you want to take signals, we don't provide signals, we provide setups for scalps, right? So 2 to 3 scalps every day. Whenever I get a swing trade, I literally trade it live excuse me, on Discord. I trade it live in front of your face. You can see me in the camera like this. You can see my trading, my live account, because I trade for 3 different brokers. You can see my live accounts. I will trade them right in front of your face. You can talk to me, you can ask me questions. Ryan, what made you put your stop loss there? Ryan, how do you know that's your take profit? You know, blah, 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 and we can discuss everything. All the other groups, the cheapest group I joined last year was £175 a month. That was the cheapest group I joined last year. Didn't provide a fucking fraction of what we provide in the group. Also, a lot of them don't even give you signals. Like, a lot of them don't even say, by the way, lads, I'm entering this trade now if you want to copy me, you know? They don't give you ways to make money. They will show you, okay, you do this, you do that, and then they just leave you to your own devices, which I guess is fine, but, you know, it makes it harder for you guys to earn money, right? Also, on top of that, every single group that I joined last year, they all offered mentorship and one-to-one trading sessions, right? They were offering 4 one-hour sessions. The lowest price was $1,500 for 4 one-hour fucking sessions. I literally offer up one-to-one sessions every single fucking day when I'm just sitting here in front of my computer and I'm like, lads, anybody wants to do a one-to-one, there's no trades for me today, let me know, I'll gladly jump on to you. And we do not charge you a single penny extra. It's all included in the price. So we thought, fuck it, we're going to increase this to 147. because we've got everything. We've got trading videos, education up here. We've got fundamentals, trading psychology, forex books if you like books, fundamentals. Yeah, we've got weekly fundamentals, which is where I post this video. Managed account. This is obviously the PAM because I trade managed accounts for brokers. Trade results. You can come in and see this yourself. What else? Trading chat. So we're always having a laugh in here. We give the setups in here. Look, here's guides as well. Say, look, what do you think about this? Blah, blah, blah. This is exactly what we do. Alright, you can see it. We do have a good laugh as well. It is full of fucking laughs in this group. We're always taking the piss, and it's a good bunch of lads. This trading course here, last month I done a trading course where I taught people over the course of 4 weeks from absolutely basics all the way through up, and this is obviously the results from that. Loads of the guys from this course actually joined this group as well. They are a great bunch of lads. And some of them actually came from watching these YouTube videos. They ended up jumping across, alright, and they're doing really well now. So yeah, pretty fantastic. I'm Ryan Mack. This is the trading guys. Remember, have a good week. Don't over trade. Don't over risk. If you're looking at the charts and you see a setup that lines up with what you're looking for, fucking take it. If you don't, and you've looked at 20 pairs and you're like, I can't see anything, well, just fucking walk away. Don't force a trade that isn't there, alright? Everyone does it. Everyone loses fucking money. And that's why people don't succeed in trading. I'm telling you, it's not because they can't trade, it's because they trade too fucking much. People don't seem to have the ability to not trade. It's not that they can't trade, it's that they can't not trade. That's what fucks people up, alright? They can't sit in their hands, as we say. Okay, so have a great week, be safe, don't overtrade, don't over risk, and we'll see you in the charts.